Well, welcome everyone. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today I have a special guest for our election edition. We're featuring Robert Stein. He goes by Bob and I go by Rob, or you can call me Bob as well. But he is the Chief Economist and Political Strategist for First Trust. I personally have been a longtime fan, follow your research, both as our clients know, and credit to your institution of First Trust. You guys were out front, especially not only last year, you guys got the award for the best, I think, last few years in a row, not only getting it right, but in the first and second of all economists out there, which is something to be said for in our industry, full of experts, but no one really wants to hang their hat on sort of their record. You guys have a track record of not only being in the top half of your class, but leading the class. And Bob is a tremendous part of that. So to have Bob with us today is just wonderful opportunity. We appreciate your time and thank you. And for our audience today, Bob is the Deputy Chief Economist. He's responsible for forecasting and analyzing economic indicators as well as written economic commentaries, which we subscribe to here at Blanke Schein Wealth Management. Prior to joining First Trust, Bob was the Assistant Secretary for Economic Policy in the U.S. Treasury Department. While there, Bob was responsible for briefing the Secretary of the Treasury and U.S. macroeconomic developments and formulating policies and proposals. Day to day, he was responsible for leading a team of 20 economists, conducting in-depth economic analysis and research. And back in the 90s, mid-90s, he basically was the chief economist for the Senate Budget Committee on Capitol Hill. And he was also the economist, the leading economist in the Senate Banking Committee and Joint Economic Committee. And prior to Capitol Hill in the Treasury Department, Bob was a journalist for Investors Business Daily. So that's a tremendous track record there, Bob. So again, once again, we're thrilled to have you with us. You definitely have some political history as well as hopefully the pulse. What is the pulse like? You're in Virginia right now. Why don't we just start with that? What is the political environment where you are? Because we're in California. Most of our clients are in my practices in California. Most, and we're in a lockdown state, lockdown situation right now. And hopefully tell me there's life after this at some point in time. But not to make light of the coronavirus, because that is a real, it's an important thing to follow health and safety guidelines. That being said, what it's like in your world, especially with the political environment that we're in the middle of right now.
Well, it's not much different from yours, frankly. I don't go into Washington, D.C. and associate personally with the politicos very much. I had my fill of that when I was working in D.C. on Capitol Hill in the Treasury Department. So that part of my life is kind of past and has been past for many years while I've been with First Trust. So should I get started with my talk, or?
Yeah, why don't we start with your opening comments or wherever you want to go, and I'll interrupt with some questions from time to time from clients or things that are on the top of our mind. I can start with a question if you want, or you can just go with what your opening comments are. Okay,
that's great. So in terms of the economy and the election, we've got a lot to talk about, not a ton of time to talk about it in. So let's kind of cut to the chase. In terms of the U.S. economy, we had a real GDP decline of about a 32% annual rate in the second quarter. So mother of all GDP declines, by far the worst quarter for any quarter since the Great Depression. In the third quarter so far, based on the data we've seen over the past few months, the data we've seen earlier this week, we're penciling in for the third quarter an increase at a 25% annual rate. Now, do not get too excited about that increase. The reason you shouldn't be too excited is because I define a full recovery as getting somewhere between 3.5% and 4% unemployment. Right now, we're still hovering well above that. I don't think we're going to see a full recovery getting back to that 3.5% to 4% unemployment rate for the next 2.5 to 3 years. In other words, it's going to be until 2023 that we see a full economic recovery from what happened briefly earlier this year. Now, in terms of questions I get from investors, the one I've been getting very often lately is how the heck can the U.S. government pay for all this? Is the U.S. going to be the Argentina of the 21st century, unable to pay our bills, completely bankrupt? And the answer to that is emphatically no. Here's why. Let me share a couple of slides. The answer to that question about whether the U.S. is going to be the Argentina of the 21st century is emphatically no. Here's why. Before the COVID-19 disaster, interest costs paid by the Treasury paid by the Treasury Department relative to the size of our economy, 1.7% of GDP. They were at 3% of GDP throughout the 1980s and 1990s. No fiscal catastrophe in the United States. They were already lower and persistently so before the COVID-19 disaster started. Since COVID-19 hit the United States, the interest burden has generally been lower, not higher, despite the run-up in the amount of debt. If you look back to January, February, and March this year, the amount of interest paid by the Treasury Department month in, month out was consistently higher, the purple bars, than the green bars down here. Month after month, the interest burden was a little bit higher. For the past 5 months on average, the interest burden has been substantially lower than it was in 2019. Not every month, but overall. Now, the reason for that is obvious. The average interest rate in all of our outstanding Treasury debt before the COVID-19 disaster was 2.4%. Since the COVID-19 disaster, the average interest rate in all the newly issued debt, the average interest rate on all the old 2.4% debt that has been rolled over, some of it has been rolled over, has been 0.2%. So when you think of it as a homeowner, if you have a 2.4% mortgage and you take some of your debt and roll it over at 0.2%, obviously your interest burden will go down. It's no different here. Before the COVID-19 disaster, we were not in a bad place in terms of the interest burden. It's actually gotten easier to carry over the past several months despite the run-up in debt. Now, in terms of the big question for this year, is the outcome for the elections. So let's take a bird's eye view of what's happening with the presidential election. In terms of the national polls, I've been following the polling average for the last 125 days of the presidential election cycle relative, so in 2020, relative to in 2016. So you can compare day in, day out to the same point in the 2016 election campaign. And this shows you the lead of whichever Democratic candidate was running in 2016 and 2020, so Hillary Clinton in 2016, Joe Biden in 2020, relative to Joe Biden. And what you can tell is that so far in 2020, Joe Biden's lead has been persistently and consistently larger than Hillary Clinton's was at the same point in the race, with one brief exception in the aftermath of the Democratic National Convention in 2016. Right now, the gap between where Joe Biden is today relative to Trump compared to where Hillary Clinton was relative to Trump in 2016, about 4 percentage points larger lead this time around for Joe Biden. However, when you look at it state by state, especially with some of the key states around the country, it's not as decisive. The polling is not as decisive in favor of Joe Biden. If you look at, for example, the state of Florida, Joe Biden is doing a little bit better than Hillary Clinton was at the same point in the race, but only slightly. Not nearly as much of a gap as you have at the national level. When you look at the state of Pennsylvania, Joe Biden actually has a slimmer lead than Hillary Clinton did at the same point in the race. And by my estimation, Pennsylvania will, if any state, probably be the key swing state in the country this time around. And then you take a state of Wisconsin, where Joe Biden is doing right now a little bit better than Hillary Clinton was at the same point in the race, but he's basically exactly where I'm having trouble drawing a straight line. He's basically exactly where Hillary Clinton was in the polling average on election day in 2016. On election day, the polling average said Hillary Clinton was supposed to win Wisconsin by roughly 6 percentage points. She ended up losing by 3/4 of a percentage point. So none of these state polls in these very key states jump out at me saying that President Trump is toast. They all say he is solidly within contention to take the presidency once again. The way I look at it, President Trump has about 5 key advantages in this race. Biden has advantages as well. We'll get to them momentarily. He's the challenger. He's got to wait. So in terms of President Trump's advantages, first, he doesn't have to win the popular vote in order to win the election. He lost the popular vote by 2 percentage points back in 2016. He might be able to do it by 3 percentage points this time around and still plausibly win in the Electoral College. There's been a lot of social unrest around the country. I think given the increase in gun permits around the country, I think that's probably going to inure to the benefit of President Trump, not Joe Biden. President Trump, right or wrong, whether it's correct or incorrect, will focus on China as the source of our recent turmoil in the United States with COVID-19. And he's going to make the assertion that because of Hunter Biden's supposed business ties with the Chinese government, Hunter Biden is Joe Biden's remaining son, that he is compromised, that Joe Biden is compromised and can't confront the Chinese government the way President Trump would. He's going to focus on Joe Biden's health, and he's going to hope that the debates are a pivot point for the campaign. However, Joe Biden has advantages as well. It is true that President Trump could win the Electoral College without winning the popular vote. He ain't going to do it if he's losing the popular vote by around 7 percentage points, which is where he is today. He's got to narrow that gap. I think President Trump becomes viable if he's behind the polling average by, say, 5 percentage points. Not that far from where he is today. And I think if he gets between 3 3/4 and 4 percentage points behind on the polling average by election day, it's basically a coin flip. But right now it's 7 points. That's a little too far behind. We just went through a deep recession, and even though the unemployment rate is coming down quickly, no matter how you measure it, it's still unusually high. We have a possible second wave of COVID-19 in the fall, and if that happens, that would inure to the benefit of the challenger, not the incumbent. And there's 2 other issues favoring Biden that I'd like to talk about in a little bit more detail. The first is faithless electors. Back in 2016, when he lost the popular vote by 2 percentage points, President Trump had, after Election Day, on paper, an electoral college majority of about 70 electoral votes. He was beating Hillary Clinton by 70 electoral votes. There was simply no way that Hillary Clinton was going to be able to attract 35 of Trump's electoral college voters to switch to her side. And so she had to concede. But let's imagine a scenario this time, and I'm not saying it's the most likely scenario. I'm not saying it's very likely. I'm just saying it's possible.
But it's 2020, so let's go with it.
What's that?
I said it's 2020, so let's go with this.
Exactly. Anything could happen in 2020. Yeah. Let's imagine a scenario where President Trump loses the popular vote by 3 percentage points, but very narrowly wins in the Electoral College, at least on paper. Let's say he has 270 electoral votes, and Joe Biden has 268. Now imagine a couple days later, Netflix Corporation, which usually appeals to Democrats more and sides with Democrats more, handing out lots of money for a TV series to the Obamas, having Susan Rice on the board. Let's imagine they offer $10 million for the life story of any electoral college voter who's supposed to vote for Trump, who has the discretion under his or her state law to switch to Joe Biden instead. Now imagine the fawning interviews these individuals could be given on 60 Minutes or on Good Morning America. And you could see the shenanigans that could take place after the election, even if President Trump has a very narrow electoral college majority. Just because he has 270 votes on paper doesn't mean he has 270 electoral votes in fact. And there could be some volatility regarding the electoral college outcome, despite what you would think based on who wins those individual states.
Bob, can I just jump in real quick on that exact point? Wasn't there a huge U.S. Supreme Court ruling earlier this year that basically allowed for just that to happen, for the electoral colleges to split, and right in some of these states?
Well, the Supreme Court ruling was that if a state has a law regarding how their elector has to vote, in other words, most states do not have such laws, but many states do. If a state has a law, and it's up to each state's discretion to pass this law, that would prevent the elector from switching sides, then those electors must follow state law or they will be replaced. However, there are many states that do not have these laws. So I would imagine that if Trump has 270 electoral college votes, that about 180 or 190 of them would come from states without any such law, and so they would have that discretion. But the last reason to give Joe Biden an advantage is that if you look at the last 3 incumbents to run for re-election and win, Bill Clinton in 96, George Bush in 2004, Barack Obama in 2012. All of them ran a series of brutal, negative, but very effective ads against their opponents all spring and all summer long. Some of you will remember the Dole-Gingrich ads from 1996. Bob Dole, personally very popular as a World War II veteran. Newt Gingrich, not so popular, in the same party, the Republican Party. So the Democrats ran ads talking about how Dole-Gingrich want to cut Medicare, Medicaid, education, and the environment. And Bill Clinton wants to protect them. In 2004, George Bush's allies ran the Swift Boat Veterans for Truth ads against John Kerry, talking about how in the early 1970s, after Kerry came home from Vietnam, he was bad-mouthing his fellow Vietnam veterans, and he threw a couple Purple Heart medals over the White House fence. And by the way, a couple of those Purple Heart medals were written by John Kerry himself, and maybe he wasn't actually injured. So these were very brutal, negative, and effective ads in 2004 run by Bush's allies. In 2012, you might remember the ads run by the allies of President Obama talking about how Bain Capital, which used to be run by Mitt Romney back in the day, would take over companies, fire some workers, leave many without health insurance. There was one guy in particular talking about how after losing his job and his health insurance, his wife came down with cancer and passed away, essentially blaming Mitt Romney for her cancer death. Brutal, negative, but effective ads. I haven't seen anything similar coming from the Trump campaign this spring and summer long, really focusing in narrowly on Joe Biden. So in the end, I think right now, Vice President Biden has a little bit of an advantage. I think President Trump can win, but I only give him about a 40% probability of winning this election. Now, if my wife came home and said we have a 40% probability of winning with this lottery ticket, I'd love it, okay? It just means that President Trump is a little bit of an underdog. I can certainly see him winning, but Joe Biden right now is a narrow favorite. So what's going to happen this fall? I look at three major scenarios. One, 40% probability, we have a completely status quo election. President Trump remains in office, the Republicans keep the Senate, and Nancy Pelosi and the Democrats keep control of the House. And if that happens, there are going to be no significant changes to tax policy over at least the next couple of years. I think there's a 10% probability that Joe Biden wins the Oval Office, but the Republicans narrowly keep control of the U.S. Senate. 10% probability. And if that happens, one thing I can guarantee, all of Joe Biden's tax increase proposals during his campaign are dead on arrival. They're simply not going to happen. Now, I could imagine the Republicans looking for an issue to compromise on, so I could imagine them saying, you know what, we'll agree with the Biden administration to increase the limit on the state and local tax deduction. Right now it's $10,000. I think they would raise it to something like $20,000 instead. But keep that in perspective. That's not a tax hike. That's a tax cut on the top of what President Trump has already done. So that's one way there might be a compromise, but all of Biden's tax increase proposals would be dead on arrival in that scenario. However, I think there's about a 50% chance of a Democratic sweep at this point. Be a narrow sweep, but a sweep nonetheless. So in that environment, there would be tax increases. They might not happen right away. Maybe they wouldn't apply to 2021, potentially not even to 2022, but there would almost certainly be some tax hikes. Here are the ones that I think we'll go through. First, the top income tax rate for regular income would no longer be 37%, it'd go back up to 39.6%. The corporate rate, which used to be 35%, was brought down to 21%, would go halfway back to 28%. Again, I'm not certain those would apply to 2021. They might not even apply to 2022. But those two tax increases would go into effect. Two other things the Democrats are considering that would influence policy, but I think would be altered before they enacted it, even if they sweep. One would be eliminating the step-up basis of death. Right now, under current law, let's say you inherit $200,000 in Exxon stock. If you sell it 10 years later for $250,000, you only have to pay tax on the $50,000 gain that occurred when you yourself held it. If you eliminate the step-up basis of death, which is what some of the Democrats are advocating, that means when you go and sell it, you have to pay the tax not only on the gain that you enjoyed, but the gain your parents had or your other benefactors had before they passed away and left you that asset. The problem with that proposal is that it's an administrative nightmare. It's very tough for tax accountants, for CPAs, even for the asset holder himself or herself, to dig up and figure out exactly what their parents or their other benefactors paid for that asset. So I think in the end, they probably do not make that change, but instead reduce the exemption amount for the estate tax. Probably not going back to where it was before 2017 under President Trump and before. But I think in the end, they probably will lower those amounts to raise a little bit of revenue from higher wealth people. The other thing that the Democrats are proposing, the Biden campaign in particular, is treating capital gains and dividends as regular income. Yes, that means a 39.6% top tax rate if you earn $1 million plus that year. Here's the thing. I think these rates will go up. I think the rates would go up to somewhere in the 25 to 28% range. But I don't think they're going to go up to 39.6%. The last time we saw a dividends tax rate of 39.6% was 2001 in the early days of the second President Bush, Jr., or W. The last time we saw a capital gains tax rate in the vicinity of 39.6, it was 40% in the early days of the Carter administration. Even Jimmy Carter and the Democrats who controlled the House and Senate back in the mid to late 1970s thought that tax rate was too high and they brought it back down. So I do expect this tax rate to go up, right now around 20%, up to 25 to 28, but I do not expect it to fully go to 39.6. The other proposal the Biden campaign is making, I think will not pass. That's why I have a big red X here. It's to impose a Social Security tax, not only on the Social Security wage base, 12.4%, applied up to $138,000 this year, and that wage base goes up a little bit each year, but to kick that tax back in once we hit $400,000. I think in the end that doesn't happen. The reason is usually when there are big fiscal changes in the United States, the Affordable Care Act, the tax hikes in 1993 under Bill Clinton, tax cuts under George Bush, tax cuts under President Trump, it's done with special budget procedures in the U.S. Senate, which allow for a simple majority to make the decision. Anything, though, touching Social Security cannot use those special budget procedures in the U.S. Senate. They have to go through regular order. I think some Democrats are inclined to try to get rid of the filibuster. I don't think they'll have the votes to do so. So chances are regular order will prevail with the filibuster rules, and I don't think they'll have the votes to apply the Social Security tax above $400,000. Time for questions, Robert?
Yeah, there's a lot of questions. Great sort of snapshot and laying the foundation for this conversation right now. I'll just go back to the taxation. We know that, one of the things with fiscal and monetary policy, and a lot of the economists, and I think including many from your shop, said, when asked the question, and you led with this, Bob, which was, our U.S. debt, right? The carrying costs of our debt. And most economists, if not everyone from the world of economics, believes that if this is a one-off event, the coronavirus and pandemic relief by way of Congress and the additional assistance through monetary policy, it's viewed as way the markets view it as a one-time event. When it gets so therefore we can sustain it. We have lower carrying costs, and it's okay to add extra $7 trillion. It's hard to say that, but it's okay. The market's taken its stride to our debt, which our debt to GDP is well over 100%. Going forward, where that becomes a concern for the markets, at least this is what most economists believe, is when you change policy, right? So long-term fiscal and you change tax policy. That's a permanent change that could change the outcome of sort of our carrying costs any which way. And obviously the Democrat and the view is, let's tax to get out of this, to pay it off. But isn't that, something to be concerned about in terms of, one, in the fixed income market, where are you going to go for yield? Two, if you've got a lot of retirees, right, baby boomers that are living off of the income from dividends and interest, and immediately you go to changing the tax code on that, there's going to be a lot of, upset retirees, I guess, if this actually happens, right?
Yeah, I would expect that if Joe Biden does win the election, and I think there's about a 60% chance, that the Democrats underperform. They'll raise taxes. They'll underperform in the 2022 election cycle. You might see an all-Republican government in 2024. So there may be a little bit of overreaching in that regard. But I'm increasingly inclined to believe that if there's only a narrow Senate majority, it's going to be a little tough to get all these tax hikes through. Many of them will not want them imposed because we're still recovering from a deep recession earlier this year. Will not want them imposed right away, which is why I think they could be delayed until 2022 or maybe even 2023 after the midterm election cycle. They could pass the bill in 2021 and say the tax hike doesn't happen until 2023. The other thing to remember, though, Robert, and this is very important, if they raise the top, let's say they raise the top marginal tax rate on regular income to 39.6%. Well, that's where it was for 8 years under Bill Clinton. That's where it was in the last 4 years under President Obama. There wasn't a recession in those 12 years. And they had a corporate rate of 35% that entire time. And Joe Biden is saying, let's go up to 28, which is, splitting the difference between what it used to be, 35, and President Trump's 21. So I don't think those tax hikes by themselves are going to destroy the U.S. economy or push us back into recession. That said, I am concerned. What if he ends up with the number of votes he needs to raise that capital gains and dividends tax rate to 39.6%? That would be pretty brutal. I think the market would react very negatively. And then I want you to think, what if I'm wrong and it's not a, what if the Democrats win more than a narrow majority in the U.S. Senate and are somehow able to apply that Social Security tax to people making $400,000 plus? Think about the marginal tax rate you pay in the state of California if you're very high income. Okay, you'd pay a federal income tax rate of close to 40%, income tax rate. You'd pay a state income tax rate of what? What's the top rate? 13% in California? Yeah. So now you're at 53. And on top of that, they're going to add another 12. So you're essentially paying a marginal tax rate in the vicinity of 65% in California if you're high income, if Joe Biden wins this election. So Bob,
let me ask a question.
And that's before your property taxes and still.
Correct. So let me ask a question real quick. Who would vote for that? Honest to God, who would actually vote for?
Well, California certainly. California, people in California are very, very likely to vote for it, and they're entitled to do so.
Well, let me ask this question. What's the reliability of your polling, right? You've got a lot of research, and we go back to 2016, and I want to just challenge the status quo. Who are you looking towards, especially as we draw closer to the election cycle, November? Who's reliable, who's not? I guess I could take a snap poll and give you a different outcome right now. And ultimately, if someone were to call somebody right now, who's really going to say, oh, I'm voting for this guy or that guy? There's that underreporting that always usually has sort of that margin of error, right?
I definitely think there's error in polling. There is a little bit of a myth, though, that the polls were way off in 2016 on a national level. That's not true, okay? So 2012, Barack Obama was supposed to beat Mitt Romney by 2 percentage points in the polls. That's what the final polling average said. He beat him by 4. So the national polling average was off by 2. They got the winner correct, but it was off by 2 percentage points. Last time around, Hillary Clinton was supposed to win by 3. She won by 2. But that point, it was critical. That 1 point was critical for her because the distribution among the states was very different than what the pollers thought it would be. So Hillary Clinton did way better than she was supposed to be in a bunch of states that didn't matter as much because she was going to win them anyhow, like California, New York, New Jersey, Connecticut, Illinois, etc. She did significantly worse in the states that were closer in polling, like Pennsylvania, Michigan, Wisconsin, Florida. And so that's why she lost. It was the distribution among the states, not that the national polls were wrong. So Here's the way I look at it. I think the national polls, based on how the Electoral College tends to go, are a little bit biased against President Trump. But the way I'm thinking about it is, I'm trying to think about where would President Trump have to be with the polling average on the morning of Election Day to have a 50-50 shot of winning. And I think he would have to be behind by around 3 3/4 percentage points, maybe 4 percentage points. If it's election morning and the polling average has him down 2.5 points, he's the favorite, not Joe Biden. If he's down by 6.2 percentage points, then he's still an underdog instead. Around 3 3/4 to 4 percentage points is that tipping point.
Let's stay on this right now. Let's fast forward to, might as well, right? It's 2020, anything can happen. No one would have predicted where we are today, nor can we predict going forward. But take us to Election Day. There's a lot of talk out there that there could be this, President Trump wins on Election Day, but yet mail-in voting, U.S. Postal Service, so on and so forth. All of a sudden, a week later, 2 weeks later, you get a reversal, and then you get this big sort of fight that's going to play out. What happens under that scenario?
Well, it'll play out in the courts, and we're already starting to see that in the state of Pennsylvania. The state of Pennsylvania has a strict law saying all the ballots that can be counted have to be into the various board of elections around the state by Election Day, by the night of Election Day. And we're already seeing the Democrats trying to get court rulings to change that, given the fact that it's a little more difficult to go to the polls, supposedly, this cycle. So we are going to have court battles. If it's a close election in the end, chances are it will be close. And it may come down to the state of Pennsylvania and the Supreme Court intervening about what ballots have to be counted and what ballots cannot be counted according to state law.
Interesting. Let me take you back real quick as to you had the chart of what's in favor of Trump and what's in favor of Biden. Yeah. I also, you got to go to messaging, right? And listen to what the candidates talk about in terms of messaging. Clearly, Biden's team is going for coronavirus and climate change. Trump is going for law and order and jobs. And if you look at a most recent, the Democracy Institute had a what's most important issue to voters right now, and 37% said law and order is the number one issue, but behind the economy and jobs, 27% of likely voters, 13% was the coronavirus, then 13% education, immigration. And I'm telling you, climate change until most recent wildfires really wasn't in the conversation. It's interesting how the headlines changed within 2 weeks all of a sudden. But Biden's camp, to my point, are focusing on the 13% of coronavirus pandemic. Maybe they're betting on a third or second wave here, and climate change. And to voters, likely voters, that's an underwhelming sort of outreach. And if you go to law and order at 37% and jobs and economy at 27% of likely voters, you talk about messaging and who's actually hitting the Maslow's hierarchy of needs, the physiological and the safety aspect of just air, water, food, and shelter. And that's what we're seeing right now this year. And, personal security and employment. I mean, to give Trump credit in 2016, he was economy, jobs, jobs, jobs. And I think unless, obviously we're not in the state where we see a lot of political ads, right? We're in California, so both parties really don't spend a lot of time. I'd imagine the Wisconsins and the Pennsylvanias, like you talked about, I don't know what the messaging looks like, but I would imagine that if you want to win this, you got to go with law and order, and you have to go with the economy. And it's all about, it's the economy, stupid, right? It's the old Ronald Reagan.
Yeah, basically Trump's message is we had the best economy. This is his message. I'm not saying I agree with it. His message was we had the best economy we've ever had pre-COVID-19. Who do you trust to bring us back there now that COVID-19 has hit the U.S. economy? Joe Biden's message in the end is going to be, are you better off than you were 4 years ago? Is the country better off than it was 4 years ago? He's going to try to be a generic Democrat so that it's a referendum on President Trump personally, not a choice, a referendum on Trump. If he can make it or keep it a referendum on Trump with the marginal voters, Joe Biden will win. If it's a choice, Trump or Biden, then President Trump has a better chance.
I also want to add in, you guys are great on forecasting sort of the GDP. You referenced that earlier, Bob. and you're now north of the 25% GDP snapback level. I
Just
will tell
the
you,
third quarter. Just
yeah,
the third quarter.
third quarter, correct. Excuse me. And so in California, we're still level one, fully locked down. You can't do anything for the most part. You guys are big fans of high frequency data and sort of the Peter Lynch model of like get out there and seeing what's happening. This weekend, our parking lot was full. I mean, I was here working away, and you have big box retailers. It's 110 degrees outside. We had 10 people deep to get into every single store you can think of, and we are locked down. You're not supposed to leave. The car wash guy across the street had 40 cars. So I can only imagine. I think we're going to be close to a 30 plus because we're the fifth largest economy.
Yeah.
And that's a good ththing. I mean, we know that the M2 money supply, we've got 23% year over year growth. That's a huge sort of data point that we look to in our industry to say, wait a minute, we're in a recession, but where consumers have sort of the ability to put that dollar back in the economy and then ultimately hit the GDP. And so what we will see, we don't know, but we're in the third quarter GDP. I'm just submitting for consideration from my side that there is empirical evidence here of like people are actually not staying home right now, and they're doing it in the right way with the masks and everything else. I was just personally shocked by the commerce that's happening because we know it's been a pull forward with regards to the digital economy. We've talked about that. Big tech has led and sort of been like and actually the fact that we just I heard this data point yesterday that we just pulled 5 years worth of a digital economy in 8 weeks in terms of adoption, right? We're doing this virtual conversation right now. Normally you guys have over 100 plus, you're on an airplane every other week speaking to us face to face, given this. So this is a different world going forward. That being said, I think the GDP is going to be greater than we think, which is a wonderful thing for the U.S. economy. I think markets sort of, vetting that out and pulling forward in terms of 2021, 2022 sort of corporate earnings. Set that aside for right now. Let's go back to, will there be 3 debates, right? Because the question is right now, it's all virtual, obviously, but we know, at least history has proven with Nixon and Kennedy, that the debates matter. And there's some chatter right now that while they have a September 29th debate, that Biden might not do it. And that's the first scheduled debate.
Yeah, I mean, I have no particular insight into whether they're going to happen or not. I'm just talking like you could ask a homeless guy on the street, and his opinion is as good as mine on that.
Is there whose advantage is it to not show up? Want to do it?
Well, it depends on whether it's televised. I mean, if President Trump has a 1.5 hour commercial for himself 3 times on TV, standing there by himself, then it could be good for Trump. If they don't televise it at all because Joe Biden doesn't show up, that's good for Biden. But I think in the end, Biden will show up to all 3.
And when you say not televised, you mean that Biden didn't show up. You don't mean it's going to be pre-recorded and not live for us. Can you?
No, I mean, if he doesn't show up,
okay,
the networks might not put it on TV.
Oh, I see. But you think Trump will still be there and Biden won't? Okay. That's a possibility.
Well, no, I'm not saying that at all. If it's not televised, I'm sure Trump's not going to show up either.
Right.
Okay. Yeah.
Interesting. Well, we've covered a lot of things right now, Bob. Are there any other questions while I look at my notes here, or anything you wanted to add that I haven't covered right now that's important for our audience to know?
Yeah, I think it's important not to let your personal political judgment and preferences cloud your judgment in terms of how to invest. We talked to so many politically conservative investors, including many smart people in the previous decade under President Obama, who were absolutely convinced the country was going to hell in a handbasket and the market would never go up as long as that so-called socialist was in the Oval Office. And the market did great. And then we talked to many politically liberal, many of them very smart people, when President Trump took office, saying there's no way they're going to invest in equities as long as President Trump's in office. And the market's done pretty darn good as well, just like when President Obama was in office. So do not let your personal political preferences cloud your judgment in terms of your long-term financial goals.
Bob, that is 100% what a great advice for our audience, because we did see the last few political cycles and this political cycle as well. Clients are asking more and more, well, gosh, what happens if, this outcome or that outcome? And you just referenced it perfectly and framed what we saw in the history books that said, we had clients that came and were worried about one party or the other, and then asked us about our advice and how to manage their wealth going forward, and we counseled them appropriately to navigate through preparing for one or another. And what's funny is that consistent theme happens. I guess that's where it's great for us in the investment world, because our clients look for us for advice, because we can navigate. And to your point, markets have been up, and they go up, and they'll go up over time if you're going to owner of a long-term asset class like equity markets, as well as a balanced portfolio and asset allocation that we do. There's a lot of empirical evidence right there. I will definitely give you that one as it relates to stay invested, but more importantly, so know what you own, why you own it, and what it's supposed to do for you, and ultimately does it tie back to your personal goals and your family needs. And as it relates to portfolio positioning, for everyone here today, Diane is we have your email address, we have your contact information. She will provide, this is a white paper that we produced at Blanke Schein Wealth Management that talks about the election and portfolio positioning. Now, we on a proactive basis are already doing that for our clients. We have been doing that even at the start of 2020, if you will. And we've been positioning our clients' portfolios as it relates to that. But if you'd like to read or get your copy here, we got some contributors like First Trust and Strategist in terms of references. Please just let us know if you got friends or family or anybody else you want to share this with. We just have this, and those that are on this call, that's our gift to you as well. Well, I appreciate that. Bob, can we go through some of the Senate races? Because I think at the key of this, if I really go back to red wave, blue wave, or anything in between, and the way markets really look at this, is we're safe for the most part from an investment public and markets if there is a basically a divide in Congress. So if we look at the Arizona, North Carolina, Michigan, Maine, Minnesota, maybe Wisconsin, Georgia, Texas, those battleground states for some of the Senate races, what's your feeling on any of the undercards, if you will?
Yeah, so in terms of the Senate race, right now the Republicans have 53 seats in the U.S. Senate. They're highly likely to win in the state of Alabama, so that makes 54. They're very likely to lose in Arizona and Colorado. That makes it 52. There are then 5 states to watch. I think the Republicans should, in the end, hold up both Georgia seats. I'm not worried about those for their sake, or Texas, or South Carolina either. But there are 5 you really need to watch. There's one Democratic incumbent who I think will be vulnerable, other than Doug Jones in Alabama, who I mentioned earlier. And that's Gary Peters from the state of Michigan. That race is pretty close. I think it's going to get closer as the race goes on. So John James has a chance of upsetting for the Republicans there. But then the Republicans out of those 5 states have to defend in 4 of them. Those would be the 2 M's, Montana and Maine, as well as North Carolina and Iowa. My best guess right now is that the Republicans end up keeping Montana, keeping Iowa, and losing North Carolina, and Maine is a coin flip, and on that will probably determine the outcome of the U.S. Senate.
That's interesting. So, Bob, special thanks to you, your time, and all the great folks at First Trust, and Brian Westbury and Jim Bowen, and we truly appreciate their guidance. And it's fair to note that not everyone sort of has the same predictive outcome for the election. I think Brian has a different one, and Jim has a different one, but that's what makes you guys great, is your difference of opinion and your collective wisdom. So it's always good to have that. So everyone, I appreciate your time today, Bob. Well, again, from all of us at Blanke Schein Wealth Management and from the state of California, we appreciate your time today and looking forward to seeing you in the future face-to-face sometime soon.
Thank you.